folks, and welcome to the Pipnotic Symposium on the 24th of September 2025. I'm just running through some of the results from the optimizer and the back tester. Last night I put the new ASR on the optimizer, and I've today sorted them after profitability. So here you can see profit, number of trades, profit factor, an average winner, max drawdown, and so on and so forth. And so what I've done now is I've got to take all of these, and there are many of them. Let's see how many there are. 3,183. So there's a lot. Some of them didn't earn a lot of money, and that's because the configurations were less than optimal. But the whole point of an optimizer like the one that I built for the ASR that you guys can use is that we're able to identify the most profitable combination of parameters. So what I've done is I've taken this one, which looked good across the board, and I now am running this in the back tester. And so that's running here, where we have the name of the algorithm just here, and I'm running this on the American dollar, Canadian dollar, on the 1 hour chart. And so all of the data that you can see here was generated on the American dollar, Canadian dollar 1 hour chart, using tick data, every tick the most precise. Because if you're using the other options, which is the close values, it's not very accurate, and so you want to make sure that you're using something that gives you the best possible results as possible. And so if we look at the settings in here, let me go to the simulator. I just posted this in the forum, but let's assume that we have an average winner to loser of 3.5, which is what we do according to the configuration that I currently have, and we're risking, let's say, 1% per trade. We have 300 trades, and we don't know what the win rate is here until this simulation is done, but let's assume that it's pretty low. Let's say 30%. Okay, we're on the hourly chart, so we can assume that we're getting roughly 4,000 periods to be used for annual returns, and let's say our target is 12%. So let's just run this. Okay, so here we have, where's the max? The max drawdown is 66%. That's huge. Okay, this is something I always look at first, which is why I don't like to use these, and so I like to keep them small. 2.5, 1/4%. We run a simulation. Oops, sorry, doesn't like that. Let's go 1/3%. We'll run that simulation because you know the I ratio. Those are the ones that the optimization process took, which took a long time. It takes about 18 hours to run. We have a win rate of about 32%, which is roughly what we have here. It's not going to be exact because it's kind of random maths. But it looks something like this, the equity curve. And this looks pretty close to the actual results that I'm getting from the back tester using 99.9% accurate tick data. So if we go here and have a look at the results there on the graph, it looks like this, where you have periods of drawdown. This is where you have to kind of sit through the drawdown there. Here is, I think this is 20%. Again, this is risking 1% per trade. And then it slowly starts to crawl out of the hole here. So it's really interesting. And here you can see that we do have extended periods of losing streaks here and here. And so going back to the trade simulator, here we had 13 losses in a row. That's a lot. I don't know many people trading with discretion that would be able to take on a new trade after 13 consecutive losers. That's a lot. And so the whole point of using an algo like the ASR is that it doesn't really give a damn about this. It just says, are we qualified? Yes, qualified, even though it's taking a loss. The only difference is the capital allocated to each trade decreases as equity decreases, and so the risk is getting smaller. But we're still gnawing away at the account balance, and then we start to stabilize, form this bottom, and we start to expand. And because we have something like this, where we have each winner is 3.5 times greater than each loser, then you can get results that look like this, which is exactly what we're seeing here. Okay, this is a really good graphic over what we can see via the simulator. And you can see here we have size, this is volume, and you can see here, if we kind of drag this up here a little bit, you can see that volume shrinks as equity decreases, and as it increases, volume increases. So then things really start to grow. This is when things begin to get exponential. Okay, so this is really, really exciting stuff. I took the algorithm that I implemented here on the website and I converted it so that I could run it on MetaTrader, so that I could run it in the backtester. And so everything that you can see here will now be available. But it's looking pretty good. It's still really far from being done. This has been running since early this morning. And so I'm guessing it'll probably be done this afternoon at some stage. But I reckon that the results will look something like this. This is going to continue. And the good thing about it is, I mean, initially, let's say that you were risking 1% per asset, 1% per trade per asset. I mean, that's a lot. So what you want to do is you want to find out your total exposure across all assets, and that might be 2%. Okay, and so then you, hey, well, how many assets do we have? We have 10. Okay, so you take 2 and you divide that by 10, and that gives us 0.1% per trade. So what you would do, similar to what we saw in the simulator, is that you would take your 10 assets, they could be maybe 10 assets from here, and you would put one instance of the ASR on each of these assets. Okay, and you would optimize the input so that each asset would have its own configuration. Again, this is what we've learned from using the optimizer. And then you would say, okay, well, we want the risk per trade to be 0.2%, so just under 0.25%, 1/5% per risk per trade. Okay, and so when one asset is maybe losing money, maybe there are others that are earning money. Okay, and so this is just a really nice way to help spread the risk over several different asset classes. Again, ensuring that the daily loss limits, the daily, weekly, monthly loss limits are enabled, or doing some kind of hedging to ensure that we're not overexposed, or we're not experiencing too much drawdown on any one asset or asset class. But it's super interesting, I think. Okay, good. Well, I'm going to leave it at that. If you have any questions, let me know. Thanks for watching.